Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at US oil, which is the CFDs on WTI, West Texas Intermediate, and also a few minutes looking at TLT, which it's not going to be particularly productive, I'm afraid there. Some good work to do here on the oil market. First, a quick acknowledgement. Unfortunately, I failed to get any extra videos out during the week. My allergies have been really bad with all the grass pollen around, but it tends to only be the last weeks of June, the first couple of weeks of July where it's really bad. So we're getting to the end of it, or we will be getting to the end of it in the next week or so, and hopefully it will stop interfering with my workload and I'll be able to get more videos out. Today seems to be a reprieve, so I'm going to try and get some work done today. So, without further ado, let's get into it. Two counts to look at on oil. One has us in a primary wave 4 of a cycle wave 1 off of the 2020 low, which is, basically hitting the reset button. The market went all the way down to zero. So, since then, I believe we're in a new cyclical bull market. Ever since it happened, I've been saying we'll be going higher, and that's what we've been doing. So, are we in an expanding pattern like this? We've done the 3, we're in the 4. We've done an A wave, we're doing a B wave, and then we're coming down and a C wave in 5 waves. This is one option. But if this is the option, it's highly likely that we will turn around very, very soon. I think we're approaching a top in oil either way. A temporary top, part of a greater cyclical move up, but it could result in a pretty significant short-term pullback. And I think there's evidence that it's coming either way on both counts. It's just going to be interpreted differently. If we turn around here, we have two yellow lines. Both represent the 1.618 extension of A, or 1.618 the length of A, to find our B wave up here. One is in linear, which is the short term, the lower one, which is at 74.615, and the higher one is the log, which is the one we seem to be snagging on at the moment, or at least have found resistance. We're trading in between the two levels at the moment at the for the last couple of days here of the week. We're just stuck between the two. This is at 75.694. So this is a very typical target for a wave 4 in an expanding flat pattern. It can also be a target along with the 123.6 for an expansive B. And also in a running flat where the C doesn't have to come all the way back below where the A completed. The C could complete before where the A completed, so you could have an A come down, B come up beyond it, C complete before it. So this is one thing we need to be keeping an eye on. Now the next count is also calling for resistance roughly in the same area, just a little bit higher, around 76.9, 76, 79 in this region here, up here. And this interpreted things differently. Instead of being in a 3 looking to complete a 4, this count suggests that we completed the 4 very quickly down here with a zigzag. A, B, C, completed the 4. We've come up into a minor 1 through this diagonal pattern, into a flat, into a minor 2, and now we're coming up into a minor 4, and then off into a minor 5, into our primary 5, into our cycle 1, and then at that point you would get a much more severe correction out into late summer at cyclical degree. Now this calls for a much smaller short-term correction, less on the upside in terms of the long term than the other count, but a smaller short-term correction than the other count. So this would be a correction at minor degree. So based off of reaching target, not saying we will, we could roll over straight away, we may push a little higher, but if we make it to the 1618 here, this would be an extension of the wave 1 at minor degree projected from the 2. So this would be likely either going to be a zigzag, it won't be a flat pattern, it would either be a zigzag or it would be a double combination of sorts, or maybe a triple combination, but double combo, triangle, or zigzag are our options, as the flat's already been eliminated, and we will obviously be expecting to see alternation between the corrective patterns. So looking at a 32.8% retracement from target, bit preemptive I know because we haven't made it there yet, we would be looking at a pullback somewhere to 69 level, 69.3. It could be a smaller pullback at the 23.6, which would leave us a bit higher, but we have to wait and see a reaction first. We've got to wait and see some kind of resistance, some kind of 5-wave down reaction on a smaller time frame, 3-wave back to suggest that the correction has begun. From that point we can start to project how low we'll be going. Wave 4 invalidation point on this count is back here. Let's just price tag that as well, and that's back at 66.733. The wave 4 cannot come back beyond this point if this is an impulse wave higher in 5 waves in a wave 5. So we have a cut off here at 66.73. This would suggest that we're looking at the alternative count and we're going much deeper. Yeah, that we are actually in this flat pattern like this, as opposed to having been in a impulsive pattern like this. I think this is my preferred choice. I would stick my neck out and say I think this is my preferred choice for the moment. I'm expecting a correction to come in the oil market soon. Soon, inverted commas, a week, 2 weeks, I don't know. It could happen Monday morning. We could be waiting a fortnight while we push up into high levels, move down, correct, and then come down. Either way, I'm expecting a correction to begin soon. That's the best I can do. Alright then, so let's just clear the count for a minute. We're going to bring up our indicators. We've got a MACD with a 10 for the short-term moving average in blue and a 20 for the long-term moving average in orange. We've also got an RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. We're going to bring up our volume profile here as well. And we're just going to bring up our exponential moving averages, 10 in yellow, 20 in blue, 60 in orange and 250 in green. We're going to back out to the weekly time frame and see what we can see in the big picture. So oil on the big picture on the time frame, we are extremely overbought. I can say that first. Here's our reading currently on the RSI. We've got as high recently as 85.8, which is higher than all the way back in 2008 here, which was the massive peak and run up to over 140 bucks. So RSI really is overbought at the moment, looking to sell off. We do seem to have a divergence building up. On the weekly time frame, we have a high here and the lower high currently between the high and higher high in price. If we are going to put in a high over the short term, which I suspect we are, both of our counts suggest we're going to bump into resistance with relatively soon. This would form a lower high on the RSI, which would be confirmed in the MACD between the high and lower high as well, and the high and higher high in price. This is bearish divergence, heralding a correction to come. What scale correction? It could be that big ABC wave of a wave 4, so 1, 2, 3, 4, which would signal a greater correction. It could be that wave 3 pullback before once again straining the RSI and overbought conditions, perhaps even creating greater divergence after a correction while pushing up into a fifth. Either way, a correction's on the cards. There's signs everywhere of it coming soon. We could blow up a little bit before, stretch this divergence even more before breaking down, but I feel we're approaching a top of sorts. We're above the 10, above the 20, above the 60 and the 250 on the weekly time frame here. We've just had the 60 cross backwards up through the 250 exponential moving average with the price above it. This is what we call the golden cross, and as I've pointed out in the past, although very bullish, just like a death cross is very bearish, they often signify tops and bottoms as well. They can be long-term tops when we get a golden cross, they can be long-term bottoms when we get a death cross. They can also represent a temporary correction before even more bullish activity or even more bearish activity, depending on which way round it is. But overall seen as a very bullish signal, but in my opinion, by the time you identify the bullish cross or the bearish cross, you've already had a heck ton of bullish activity and a hell of a lot of bearish activity by the time you identify these things. So I never put too much weight into them, as I've often seen them associated with market tops and market lows rather than any further continuation. But we'll be keeping an eye on that. We've got this bearish divergence to keep an eye on as well. Daily time frame, how are we looking? Yeah, we've got the same divergent highs on the RSI between the 17th of February here and the 14th of June. So we've got this high back here, high, lower high, same deal in the MACD again, same divergence, looking to find the top somewhere around here for a correction, probably into that wave 4 or potentially into that wave C. We will know by the violence of the correction, the speed of it, the rate at which it advances, whether we're looking at a short correction or whether we're looking at something more volatile, something a bit deeper. So, and we've even got short-term divergence between these recent highs. If we just look at this high here, high, higher high, higher high. We've got high, lower high, lower high in the RSI. So divergence building up on the short-term time frame as well. So yes, it does look like we're approaching a top, still above all the moving averages here. Nothing else to really speak of. We'll leave our coverage for oil here for the week. Now we will spend 5 minutes and no more than that looking at TLT because I can't tell you what's going on, to be absolutely honest with you. This is my count for TLT. I'm getting to the point now where I'm honestly reconsidering the whole thing, as all of this move off of the low has got me scratching my head. Okay, so on the large time frame, A, B, C, we get A to C parity down here at 133.19, right? Right where we bottom. So A equals C here in log scale, and then we bounce. So yeah, we're impulsive, right? We've bounced. We've gone 1 to 1. A equals C, A, B, C, lovely correction. We've completed it, and now we're moving higher. Well, that would be wonderful if we could count any form of impulsive behavior off of the low. We just, unless you can see it and I can't see it. You know, this to me is 3 waves all day, and this is a lower high, and this was to be an overlap even if it wasn't, if this was a higher high. So this is a 3-wave move, not a 5-wave move. So this is not a 1 into a 2. If this is an A, B, C 1, A, B, C 2, where's the 3? Okay, A, B, C 2. Then we get an impulse. So this looks like 3, this looks like 3, and this looks like 5. So it's a flat pattern, yeah? A, B, C. A to here, B to here, C to here. Yeah, well, I don't think it is, because we don't even get a 78.6 retracement in what would have been the wave B. So we're not counting it as a regular flat because it doesn't come close enough back to where it began. That's a rule. So what is it? Is it a W, X, Y? And this is some kind of 3-wave structure? Possibly. But I struggle again because this would have to be a zigzag. A, B, C within the W. And there's no impulse wave here in the C. It's just not here. You know, 1, 2, overlap, 1, 2, overlap, 1, 2, overlap, 1, 2, overlap, 1, 2. There's no 3, there's no 4, there's nothing. It's just a bunch of overlapping nonsense. So this is not an impulse wave inside of a C. So counting this as a zigzag is basically wrong anyway. So I don't even know how I would get 5 waves in here. I just can't seem to find it. So this looks like a 3-wave swing to here. This looks like a 3-wave swing to here. This looks like 5 waves down in a C. So this ABC, that looks legit. Okay. We even come to within 90% of where the A started. So down to here. Here's your 90%, 89% tag to the tick on the B wave. So this is a flat all day. This is a flat. So you could say, alright, you've got to label it 1, 2, and now we're in a 3, and that's why we can make sense of this impulse. Okay, fine. I'd argue that given the evidence, that actually looks better, and we're going significantly higher. Bond market's bottomed and we're going up. But this doesn't count as a leading diagonal. Okay, there's no 3rd and 4th wave in this initial move in the 1. We still have to have 3 waves into 1, 3 into a 2, 3 into a 3, 3 into a 4, 3 into a 5. And we don't get it. Or 5, 3, 5, 3, 5 is a leading diag with an overlap in the 4, which we don't get. So what's the other option? 1, 2, 3, 4, 5. Leading diagonal, truncated 5th. And then no 3-wave move into the 2. This is 5 waves down here. Is it a zigzag? And now we're in a 3. You can see what I'm saying. So I'm in a bit of a befuddlement at the moment. The count's confusing me, so I think we're just going to have to clear away the count, work on some basic technicals for the moment. If you've got an idea of your own that you'd like to share, feel free. If you're one of our members and you're on the Discord, you're a patron, feel free to share your ideas as well. The count off of the low has got me confused. It wants to count bullishly. It's made a C to A parity, but there's no sign of impulsive move off of the low. You know, it all looks corrective, the whole thing. This looks like 3 waves. Okay, you know, and yet getting it to work, very, very tricky. It will be there will be a count, there will be a solution, there always is. Elliott wave always provides a count, but can your human eyes see it? That's the issue. Can you find it? Can you understand it? Can you make sense of it? I have to admit I need to go and put more time into this chart. I think I've probably been neglecting it. Either way, let's have a quick look at our fundamental basic analysis first before we leave. 10, 20, 60, 250. Come out to the weekly time frame again, do what we did with oil, and just have a look. So the sell-off in bonds was really quite brutal, obviously. We came all the way back to test the 250. We find A to C parity at the 250. That feels like a low. You know, I've been saying for the longest time, and I think we're going to have 1, 2, 3, 4, 5 lower down. My gut still thinks it could happen, but the problem is I haven't really got evidence to support either at the moment. Just in a bit of a state of confusion. So MACD was still below the zero bound. Short has crossed over the long. Lots of green bars in the histogram. Yeah, so what? That could look like a correction. That could look like the start of an impulse wave. We got to very oversold conditions. We've moved back up into neutral territory, into the RSI. We have not seen that low, higher low, low, lower low that we traditionally see in a bond market bottom, which we've seen many times before. Hasn't occurred here. So maybe we've got another move lower. Daytime frame, let's see if there's any strong resistance overhead. Now we're looking for oil to find a high this week or in the next week or two, right? I have suspicions that the stock market's going to find the high in the next week or two as well. Everything's looking a little bit overstretched, and we've got the 250 exponential moving average right over our heads here on the daily time frame. Perhaps another push higher, and then we'll find resistance and turn lower. But until we find something which resolves this move, either a real breakdown which breaks all of these previous levels and says yes, this was three waves, it was corrective, we're going lower, or we see an acceleration to the upside, this still looks, to me, from here it looks corrective because of this initial three-wave swing. If this three-wave swing wasn't here and we'd gone 1, 2, 3, 4, 5, 1, 2, 3 ABC, I'd be like, yeah, this is the bottom, this is ABC complete, and now we're heading higher. So sorry guys, that's the best I can do for you at the moment on TLT. The account's a bit of a bitch. If I'm just being an idiot, I'm being stupid and I can't see the obvious, please tell me. And feel free to do so. Alright then guys, that's it for today. If you're new to the channel, you like what you're seeing, however, please subscribe, smash the like button, hit the little bell notification icon to remain informed of future video releases. If you want to leave us a comment in the comment section below, feel free. Thank you as always to my patrons. Your support is greatly appreciated. If you fancy becoming a patron and getting access to the Discord, getting access to the dividend calendar, stock pick system, all my weekly chart updates and discussion with me and all our other members, and that kind of thing appeals to you, head over, follow the link to Patreon, see if there's anything that takes your fancy and sign up. It's the perfect time to do it at the start of the month. Also, if you're not following me on Twitter yet, there's a link to my Twitter feed in the description box below. Head over and follow us. And I'll be back with you guys shortly. Hopefully get another video up by the end of the weekend. Alright guys, take care. All the best. Bye bye.